now accounts may only be held by individuals, sole proprietorships, government units, and nonprofits. So basically, if you're a for-profit business, you can't have a now account. And if anyone's tried to open up a business checking account, that makes sense because all your business checking accounts are non-interest bearing. So that explains why business checking accounts are non-interest bearing, but a personal checking account, which is actually a now account, pays interest. So what does all this mean? It means that prior to the crisis, all your checking accounts were now accounts, the majority. And then with the onset of the collapse of the economy, the FDIC opened up a program. And I'm going to read a little excerpt here regarding now accounts and the program. On October 14th, 2008, the Federal Deposit Insurance Corporation announced its temporary transaction account guarantee program, providing depositors with unlimited coverage for non-interest-bearing transaction accounts if their bank is a participant in the FDIC's temporary liquidity guarantee program. Non-interest-bearing checking accounts include demand deposit accounts and any transaction account that has unlimited withdrawals and that cannot earn interest. Also included are low-interest now accounts that cannot earn more than 0.5% interest. Interest-bearing accounts include now accounts that can earn more than 0.5% interest. Other interest-bearing checking accounts, money market deposit accounts, savings accounts, and CDs. This program is scheduled to end on December 31st, 2009. So that explains why, starting either on January 1st or if the banks say starting April 1st, they reconvert what used to be now accounts that were converted to traditional checking accounts so that they could qualify for unlimited liability coverage. And now that the program has ended by the FDIC, these accounts are being reconverted to now accounts. So it's not this big hyped up, power grab by the banks trying to take your money in the event of, runs on the banks and panic. It's really just the reconversion of a prior program, and only the major banks seem to participate in this program in converting their now accounts into traditional checking accounts. The FDIC normally insures an account for up to $250,000. And with this program, they're offering unlimited coverage, which gave the banks incentive to turn their now accounts into traditional checking accounts or non or low interest bearing checking accounts. So this explains why banks are sending out these letters, because as the regulation states, they have to be notified in writing of the 7-day notice of intent to withdraw transfer funds. So what this all means is that this is not some big scary power grab by the banks in this situation, and this is nothing new. This is actually just the reinstatement of a type of account that has existed since 1980 and was only temporarily unused by certain major banks for the period of a year and a half or so. I hope this was informative for you, and I hope it clarifies some of the confusion regarding this matter, because I haven't seen any counterpoints, and the news and everyone has been just taking this at face value. If you liked the video, don't forget to subscribe so you can get future updates, and please comment. I'll see you around.